So fundamentals are just economic indicators that tend to depict the strength or the weakness of a particular economy. So if we are taking something like NFP stands for non-farm payroll, which measures the total number of jobs created in the United States out of the agricultural sector. Then the data from that particular news event will tell us the strength or the weakness of the United States dollar. And if the data comes out and it tells me that the United States dollar is going to be weakening, I'll be able to know how to place my trade in relation to that data. And if it comes out and it tells me that the United States economy is appreciating or the dollar is going to be appreciating, I'll be able to take my trade in relation to that particular news event. All right. And how do you see this particular news? Let's start with how do you see the news. The best website I want you guys to use is free. It's investing.com. It's easy. So just quickly, let me just show you guys quickly on my phone. So just go on your phone and go on your Play Store and type investing.com. You'll be able to download an app that looks exactly like this. All right. So when you go on investing.com, let me show you how to customize your phone so that you can easily see this data once the data is released. So I want you to come where it says more, click on more, and just check where it says calendar or something. Calendar, or let's see. Okay, calendars. You can see we have calendars right there. So under calendars, you can see we have nothing today, meaning we don't have any major economic data today, because today is Saturday, of course. So tomorrow is Sunday. I don't expect any economic data tomorrow. And this week coming, this week that just passed, you can see these were all the news events we had. You can see we had CPI, PPI, and this particular the way the data is displayed here, this is how you read it. You can see this particular section where you see the time, right? That's the time the news is going to be released, and where you see USD, that is the currency pair in which the news is going to be affecting, and this is the news you're going to be reading. And before the news is released, there are three things you need to be paying attention to. You need to pay attention to the previous data, and then the previous data, the forecast data, and what you'll be watching will be now the actual value. So the actual value will only be displayed the moment the news is released. And if that actual value comes out and is bigger or is more than the forecasted value, then you expect the United States dollar to appreciate. That's why you see the data is going to be green, like here. All right, you can see the previous was 0%, the forecast was 0%, and then the actual was 0.1%, meaning it was more than what was forecasted. So that's why you see the data in green, meaning the United States dollar was positive. Any currency pair that you have the United States dollar as the base currency, you expect it to go up. We'll come into that in a little bit. All right, so that's how you read the data here. So any day you want to trade, you come on this calendar, you just click on today, and you'll be able to see the news events that are going to be affecting. But you need to first of all know how to filter. So to filter the current news event, because in every day we used to have about 50 news events throughout the world, but there are few you need to be able to filter. So to filter, you just click on this funnel right up here. You click on the funnel and you come down where it says set importance. I want you to click on where it says high, because we will only want to see high impact news events. All right, so just click on where it says high impact news event, the three bull, and that is it. You can then go back. Any news events you're going to be seeing is going to be the one with three bull, meaning those are news events that have high impact in the market. Because there are some news events, once the data comes out, you see the market is quiet, nothing happens in the market, because those news events are what we call quiet news events. They don't have volatility. So those are not the news events you should be trading. All right, so long as you've already done that, if I can go into next week, you can already see these are the news events we have next week. I already see Monday there's new news event. On Tuesday we have CPI for the euro, we have building permit for the United States dollar. I personally don't trade these two, or I personally don't pay attention to any of these two news events. Then on Wednesday we have CPI year of year for Great Britain pound. That's a powerful news event. Then going down at 5 p.m. Which is my time. Remember, they're going to convert it according to your time zone. According to my South African time, it's going to be at 5 p.m. We have existing home sales and crude oil inventory. The only one I'm going to be paying attention is this crude oil inventory, which is at 4 p.m. Thursday, we have initial jobless claim, we have GDP for the United States, and blah, blah, blah. The only one I'll pay attention is the one at 3:30 my time, which is going to be GDP for the United States dollar. And then on Friday, we have a couple. So that's just how you are able to know which news event is going to be coming up and at what time. Good. So after saying this, okay, let's go now into let's just go into this week and take any news event which happened this week, right? Let's just go into CPI. You guys already know of CPI. So if you can see the CPI that came out on, this was on Tuesday, the CPI was positive for the United States dollar. That's why you even see this arrow. Meaning this was any currency pair that has the United States dollar as the base currency would have expected it to be going up. All right. So that is that. Let me now, since we are taking this particular news event, let me show you how it would have affected different currencies and how you would have traded. So there are two strategies you can use in this case. At the start of the news, you can use what we call the strategy, where you put your buy stop and your sell stop. But now, with too much slippage in the market and with less volatility, the strategy is not that too profitable in December. So that's why we only trade now. Most of the time, I trade after the news has been released. So to trade after the news has been released, you just wait until the news has been released. And then a couple of minutes after the news has been released, you'll be able to come on investing.com, go on your calendar, and you can see the news event. Right? So when you see the news event, you'll be able to either see a green here or red. If it's green, it means it is positive for the United States dollar or that currency pair the news is going to be affecting. So for this one, CPI, you can see it was green for the United States dollar, meaning any currency pair that has the United States dollar as the base currency will be going up, and any currency pair that has the United States dollar as the secondary or the quote currency will be going down. So currency pairs that you expect them to be going up will be currency pairs like USD JPY, USD CAD, and I think just USD JPY and USD CAD. Those are the most popular. Then majority of the currency pairs that are inversely related to these currency pairs I just mentioned, you have currency pairs like Great Britain Pound, USD. In that case, you can see USD is the secondary or the quote currency on that currency pair. You have currency pairs like gold. Gold is SAU USD. You can see USD is the secondary or the quote currency on that currency pair. You have currency pairs like AUD USD, NZD USD, and the list goes on and on. Any currency pair that has the United States dollar as the secondary currency will go down because it has an inverse relationship with the United States dollar, since the United States dollar, which is being affected, the data is green. All right, so that's what you just know at the back of your mind. If the data was a red, then you expect any currency pair that has that particular currency to be going down, since it's red. Any currency pair that has the currency as the first currency will be going down, and any currency pair that has that particular affected currency as the secondary currency will instead be going up, since it is inversely related. So that is correlation and how inverse relationships work when it comes to news events. So I hope I've taken that one out of the way. Good. So taking again, see this CPI for the United States dollar. This is how I would have traded it. This is how I traded it. This is how I made more than $25,000, which I shared on my Instagram. So it's simple. You take something like gold, right? Gold is SAU USD. It has the United States dollar as one of the currency pairs. So the most important thing, it has to have the United States dollar as one of the currency in the currency pair. So if I'm taking something like SAU USD, USD is the secondary pair. But I've already explained the inverse relationship when it comes to currency pairs. Since gold is SAU USD and the data is positive, will you expect the chart to be going up or down? The answer is obvious. You expect the chart to be going down. So after the news has been released, the market is going to shoot down immediately on gold, SAU USD. And after about 30 minutes, I usually wait for about 30 minutes. After about 30 minutes, I'll start watching to see the price action, right? Because I'm already having my bias. I know the market has to sell. Because this is CPI, this is a very powerful fundamental. I know the market has to sell. When fundamentals come into the game, bro, every other technical is going to list it. I already know the market is going to sell. But the main question is, where do you enter into that particular trade? So I enter, I wait for the market now to consolidate, to breathe in, because now you know the market always breathe out, breathe in, breathe out, breathe in. So what I wait is for the market to consolidate a little bit against the normal trend, and as soon as I get the first red candle after that, I'm going to be getting into that particular trade. Once I get into that particular trade, my stop loss is just going to be above the current high, which is going to be above maybe 20 to 30 pips, because this is fundamental, the market is volatile. And in this case, I go for a risk to reward of about 1:3 or 1:4. And this has, in most cases, 80% of the time, it comes out to be a profitable trade. So this is how I'm going to show you guys as many examples as possible. I don't know if I have, let me see if I can just quickly go on my computer to show you guys an example of what I'm saying. All right, so I can close this one, minimize this. So we have our clean chart, right? We have our clean chart, and let me just show you guys what happened with this fundamental, because the fundamental was somewhere here, and let's just see, it was at 330. Fundamental usually happen at 330. Good. So if you can see this candle here, can you see down here it says 330? That is 330. That was when this particular news was released, and it was positive for the United States dollar. And since this is gold SAU USD, if it's positive for the United States dollar, you instead expect gold to go down, since the United States dollar is the secondary currency on this currency, right? So this was the first shoot, boom, going down. This is a 5-minute time frame, and after 30 minutes you can see 5 minutes, 10 minutes, 15, 20, 30. After 30 minutes, what happened? You guys can see this retracement we started having on the opposite direction. And remember I said, after I start seeing this retracement, I want the market to push back and give me the first red candle, or the first confirmation candle in the original direction of the news. The first confirmation candle would have been this one right here. So after I've gotten this confirmation candle, so this big ass candle is going to be our confirmation candle. So I got into the trade somewhere here. My stop loss usually go above this particular candle just here, so I can risk about 40 pips. And in this case, remember, I used to go for a risk to reward of 1:3 on all my fundamental trade. So if I was risking 40 pips, I'll be going for 120 pips. 120 pips is right down here, right? You can see we hit that particular target. And let me just show you guys, quickly show you guys this. So 120 would have been somewhere right down here. So we have a little bit of consolidations, and we still hit that target. So stop loss here and take profit would have been somewhere here, 120 pips. That is it right down there. So that's how I trade on news events. I wait for the market to consolidate in the opposite direction, and as soon as I get the first confirmation of the market going in that original trend, I trade in the direction of the trend. I trade in the direction of the fundamentals. I can't get the fundamentals telling me the market is going to sell and then I'm trying to instead buy. No. So long as I do that, 90% of the times this trade always hit my take profit. And remember, this is a risk to reward of 1:3. So this is how I make millions in forex trading all the times using just fundamentals. Remember, this is just one of my fundamental trading strategies. I have many fundamental trading strategies, which you'll be able to find them on my channel. Make sure you watch this video as many times you can, practice it. Let me know in the comment section if you have any question when it comes to trading with fundamentals, and I'll do my best to assist. Click out this video to check out a very popular correction, fundamental correction video which I made for you guys. Click this playlist to check other fundamental videos which I've created. Click here to subscribe to the channel, and I'll see you guys on these other videos. Peace.